last session we have discussed about the valuation class. So what is the importance of the valuation class and how what is the purpose of the valuation class? So the purpose of the valuation class is that to determine the GL accounts, the valuation class we are going to assign into the GL into the material master data. Okay. Now today we are going to see the similar way. Okay, there are different concepts which we are going to discuss. One is a value. Yesterday we have already discussed the valuation class. Now valuation grouping code. Valuation grouping code. We'll discuss one by one. What is mean by valuation grouping code? Valuation modifier is there. Valuation, okay, modification key it is there. Okay. So first let me explain one by one. Then what will happen? So the valuation grouping code. Okay, now let me take the example so that it will be easy for you to understand. Now this is our organization. Okay, A001. Okay, so now for our company code, so for our company code, then let us assume we have the two plants. Plant A is there, then plant B is there. Okay, I just have taken the two examples only. So now, so the how the valuation grouping code will be used here. Okay, now this is our company code, because this is a very important one, and for your interview also, interview perspective also, they must ask you. Okay, this is the logic you must and should aware. Okay, now I have the two plants. Two manufacturing plants are there. Okay, for under my company code. Now let us assume to for evaluation. Okay, to valuation of the material, to valuation of raw material, raw material, both company codes, both company codes are using the same GL account, same GL account. Let us assume whatever it may be. So now here, to valuation, for the valuation first of all, so the valuation we need to understand in SAP. For the material valuation we can do at plant level and as well as company code level. First of all, we need to understand at what level, what is the valuation level. Okay, levels of the valuation. Okay, we can do we can perform valuation at company code level. The second thing is that at plant level. But SAP has suggested that you can do the valuation at plant level. Okay, why SAP has suggested that? Okay, do the planning at plant level. Okay, let me give the scenario. Now let us assume. Okay, then let me put it here. Do one thing. Okay, so the valuation. Okay, valuation level, valuation area. I will put it like this: valuation area. Okay, so the valuation areas in SAP, we are having the two valuation areas. Valuation area, one is a plant level valuation area valuation. Then the second thing is that company code level valuation. Okay, so then note, SAP has suggested that the valuation can be done, the valuation okay, SAP has suggested that use the, okay, instead of this one, use the valuation area. Okay, use the valuation area. Use the plant level valuation area. I'll mention here plant valuation area. Okay, use the plant valuation area. Why SAP has suggested to use the plant level valuation area? Okay, first we need to understand this one. Then once it will be clear for us, then we'll jump into this one. Okay, now let us assume. Okay, I'll remove this one. Then I'll keep it aside this one. Then I will explain you later on. Okay, take this. Go here. So fine. So what will happen here? Now let us assume plant A, which is located in Hyderabad. Okay. So the plant B, which is located in Y. Simple example. Now what will happen here? Okay. So this plant is in Hyderabad location. This plant it is in Mumbai. Okay. Now the raw material suppliers. Let us assume the raw material suppliers, the vendor which is there in, I mean the where we are buying the raw materials. Okay, so the we are buying from the raw material from the vendor. So he is also from Hyderabad. Let us assume, I'm just giving an example here. Okay, so now what the vendor, because for this plant, whenever the vendor is going to supply the raw material, for him it is a local vendor is nothing but within the city only. Now if we want to buy the raw material from the same vendor, then we want to send that material to the Mumbai plant. What will happen? We must have to bear some additional charges here. Okay, we must have to bear some additional charges. What kind of additional charges? Might be transportation charges, some taxes, and as well as the or some GST we have to bear. Okay, intrastate GST, and as well as some toll gate charges. Okay, shipping, loading and unloading charges we must have to bear. Okay, so all the extra charges we must have to bear. Okay, does it the same for both the plants, the expenses? If I could say, for this Hyderabad plant total, okay, until to reach the plant, the cost of the material per unit is a 10 per unit is 11 rupees, 11 rupees per unit, or per kg. I'll mention here per kg cost would be. Then as now the similar way for Mumbai plant, now if I am buying the same vendor, okay, then the cost would be 13 rupees per unit. 13 rupees per kg, 13 rupees per kg. Why the cost has been increased here from this plant to this plant? So meaning that, so there are some additional expenses we have to bear, because we have to buy in Hyderabad, then we have to send those raw material to the Mumbai. So in between that, the transportation cost, and we have to bear additional charges. So that is the reason this 2 rupees is extra per kg. Okay, so now if this is the situation, if I do the valuation, if I perform valuation at company code level, what will happen? I don't know. Okay, this material cost, what is the original cost for this material for this plant? Okay, what is the original cost for this material for this plant? I will not come to know, okay, after valuation, because total maybe it will, because these 13 rupees, this 11 rupees will club together, then it will show at higher level. But the management or whoever want to see the reports, they will not, they will not come to know what is the exact the valuation price, what is the price per unit for this plant. They will not come to know. So that is the reason the SAP has suggested that go by the valuation. Always you can perform the valuation at plant level. Okay, the plant level. So that is the reason, if we perform the valuation at plant level, okay, your plant is nothing but your valuation area. So you just understand that one, your plant is nothing but your valuation area. Okay, so the if you perform valuation at plant level, you will get the information. Okay, now, okay, so now that is the so that could be the reason SAP has suggested that you can perform that one. Okay, so the valuation areas too, two are there. One is a company code level, another one is a plant level. Okay. Then let me come to here. Let me take this example here. Then come to the valuation grouping code. Okay. Now the valuation grouping code here. Okay. So valuation, what exactly mean by the valuation grouping code? Okay. I don't want this one. Okay. Now let us assume for raw material, for local raw material purchases. Okay. To valuation of the local raw material. Okay. Local raw material purchases. Okay. I want to have a one GL account. So meaning that even if you have the different prices also, the prices, okay, whatever it may be, prices may be vary. Okay. Then even though you want to have a, we want to have a one GL account, meaning that the whatever the transactions which are happening for all the local purchases, then it should go and it should reflect into in this GL account. Okay. So for this one, what I can do, valuation grouping code. Valuation grouping code is nothing but a, so each, as I said, what I said, each plant is a valuation area. Okay. So now if I want to post, okay, if I want to perform or if I want to use same GL account for multiple plants, I need to groups together these plants. Okay, what I will do, the valuation grouping code, I will give X. Okay, I will give X. Okay, X I will assign for this plant and this plant. Then the value, so that what I can do, the X I will assign whenever I am going to, okay, mapping the account determination in the OBYC. Over there I will mention the valuation grouping code as a X. Okay, so X is nothing but it will be applicable. The same GL account can be used for the, I mean, no need to map multiple times. Okay, I am grouping together the valuation codes. Okay, now valuation, okay, then I am grouping multiple valuation areas. Okay, then so even no need to map the multiple times for this plant, no need to map this GL account, for this plant no need to map this GL account. By using valuation grouping code functionality, we can assign only once, then that the same GL account will be determined. Okay, so the same GL account determined for the valuation. Now the next one is that valuation modifier. Valuation grouping code we have seen. Valuation modifier, it's a important, very important one. This one is the valuation modifier. Okay, so what is mean by the valuation modifier? Okay, I will put it here all together. Let me select, here is a company code, then chart of accounts, then plants, then plants, then here I'll mention, here is the local raw materials. Okay, for local raw materials itself I would require it a separate GL accounts. Okay, let me put it here as a, my company code is the, okay, A001. What is my chart of accounts is a 0001. What we have 0001. Then what is the plant we are having is a, let us assume the plant one is a Hyderabad. Okay, then we are having the, let us assume, then plant B is the, okay, let us assume plant B. Okay, I'll mention plant B is the Mumbai. Plant A, okay, plant A in Hyderabad. Okay, then even though let us assume one company code, the scenario, this scenario will be applicable for the one company code or multiple company codes. Remember, now the plants, I have a two plants here. Okay, I have a two plants here. What will happen then? The raw materials, local raw materials I am purchasing, one is a, let us assume iron I am purchasing, then I am purchasing is a rubber. Okay, just for our understanding. Okay, now in this situation here, now if I want to have a, okay, if I want to have a valuation modifier, what I mean valuation grouping code. So the valuation grouping code, what I will do, valuation grouping code, grouping code I'll mention here. So for these two plants, I will mention is the, let us assume here I'll mention is the GL account also. For this one, 200, 120, let us assume. Okay, for this one also, I want to follow the same GL account. Then what I will do during the valuation time, valuation grouping code, I will give X. So X meaning that what will happen? Okay, see the for these two plants. Okay, for these two plants, I want to the business transaction should go and hit to the same GL account. So the valuation grouping code I will mention is the X here. Okay, in case there will be a situation, let us assume, okay, this is the one example. Okay, in case valuation grouping code, this is the one. In case if there will be a situation, call it as a, now for this plant I am using a GL account, this plant I am using separate GL account. Then the valuation grouping code doesn't require here. Then the valuation modifier will come into picture. So the valuation modifier, okay, then you need to specify, okay, you need to specify the valuation modifier. Okay, separate valuation modifier. Let me take here how the valuation modifier will be done here. Okay, the GL account. Okay, GL account for plant B. Okay, I'll mention here is the GL account for plant A. Okay, this is a GL account for plant A, or this is a GL account for plant B. In this situation, how I am going to specify for this one the valuation area, sorry, the valuation modifier. Okay, in this situation, the valuation grouping code doesn't require here. Then the valuation grouping code I will specify here is the, let us assume, I'm just taking an example, 01. Then for this one is the 02. So what will happen here? So the because here for individually, I want to use the GL, separate GL accounts for valuation of raw materials. Okay. So in this situation, I need to have a separate GL accounts for each and every plant and for evaluation purpose. So that is the reason valuation modifier will come into the picture. Okay. So the valuation modifier will come into the picture. This is the one, is a very important one. Okay, so then, and also this is the interview point of view also, they may ask you, okay, if I have the separate GL accounts for valuation, okay, I have the two they will give the same scenario. Even interview also, they will give you the same scenario. One company code will have the two plants. In such situation, each plant would like to have a separate GL accounts for valuation. Okay, then how can you map, or how can you design this scenario into system? Okay, so then you need to aware of this one about the valuation modifier functionality. Okay, by using the valuation modifier, we can achieve this one. Okay, remember this one, this is the important one. Okay, in case if you have the valuation grouping code, okay, this is the valuation modifier I have explained, right? Okay, now let me put it this one into, then in case if I have the valuation grouping code, okay, valuation grouping code, let me explain you that one also, the scenario. Then valuation area is nothing but your plant. Okay, the plant level valuation can be done. I have already explained here in detail. Okay, then valuation area is nothing but your plant. What is the chart of accounts? Chart of chart of account. What is your chart of accounts? What is the company code? Then valuation. So here this scenario would be, I don't want to follow multiple GL accounts. If I want to follow the same GL accounts, let us assume the valuation area is nothing but a, okay, then Hyderabad plant, then let us talk about Mumbai plant. Okay, we have the two plants, right? One is Hyderabad, one is a Mumbai. The chart of accounts which we mentioned, 0001, then 0001, then company code. I will take the same company code only. Okay, A001, EA001. Then okay, let me take another one also. Let me take Chennai. Okay, then next one is the Okay, so here also the similar way the chart of accounts are same. Okay, then let us assume I have a company code A002 also. Okay, in this situation what I will do, even though the valuation grouping code, when we are pitching into the valuation grouping code, I will mention the same. So here this is the scenario. Okay, then meaning that here, okay, for all, remember, okay, for x is nothing but a, okay, for x, okay, I'll mention when we mention the valuation grouping code, group is x. Okay, when we mention the valuation grouping code is x, okay, for all local raw materials, for all local raw material purchases, we will have the only one GL account, one GL account, one GL account for material, valuation, so meaning that we will have the GL account. In terms of GL account, okay, no need to map the GL. Okay, then if I want to have a GL account here, okay, I will have a, then for all these things I will have only one GL account. Okay, so because the valuation grouping code here, it's not the same. Here the GL account, if I talk about the GL accounts, are both are differ here. Okay, so this can be achieved either for the one company code, or if you have the multiple company codes, so whatever it may be, you need to understand this scenario is important for you. Okay, then okay, so if anyone is having any further queries about the valuation class at valuation level, okay, then valuation modifier, valuation grouping code. Okay, so if anyone is having any further queries, so please let me know. Okay, fine. Then now 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 we are talking about materials. Okay, now how can I identify the materials? Okay, now I have the different kind of raw materials. Okay, different kind of raw materials are there, finished goods are there, different kind of materials are there. Okay, how can I identify them in the system? Okay, so then and also at the same time in SAP we have a price controls are there. We have a two types of price controls are there. One is a moving average and one is a standard price. Okay, so what is the difference between moving average and standard price? First let us discuss about the price controls, then once we will be clear on that, then we'll jump into the types of material. Okay, then material price controls, material price controls, then we will have the two types of material price controls, are two types. I will mention straightforward here, two types. Then one is a moving average, the second one is the standard price, Okay, so what is the difference between moving average and standard price? Okay, so now let us assume, but for moving average we are going to use for all the raw materials, we are following the moving average price control. For standard price we are following for all the raw materials, for all the raw materials valuation we are going to use the, okay, moving average price control indicator. For standard price we are going to use the finished goods, for finished goods. Okay, now first let us discuss about what is meant by moving average, what is the standard price. Okay, now if we talk about, okay, moving average, now let us assume for moving average. Okay, now what I will do on 1st of, okay, let us assume, or else 20th of February, 20th of February 23 purchased, okay, purchased rubber, let us assume iron, okay, the raw material which we have purchased. The cost would be around, it's a 100 kgs, okay, let us assume, I'll mention here quantity, then price, then 10 rupees per unit. Okay, what will happen here? 100 into 10, what will happen? 1000 rupees the cost. Remember, then the same way on, let us assume on 22nd of February 23, the same material we have purchased. Then let us assume quantity is the 200 quantity. Then here is the price would be, let us assume we have purchased the 15 rupees. Then what will happen? 3000 rupees. Now, if somebody will come and ask you, then if somebody will ask you what is the average price of this one, okay, how we can do this one, the average price, okay, the average price which I am going to calculate, what is the total quantity which we are having is a 300 quantity, okay. Then, so out of these 300 quantity, what is the cost, what is the total cost which we have incurred, okay. Now the average cost per unit per kg, okay, what is the average cost per unit, okay. Then what we are having, total cost divided by 300. So what is the average cost? Now we are not going to see, I mean, we are not going to treat this material. Okay, now for this quantity, okay, whenever we on 20th purchases, the price was 10 rupees. For 22nd February, the price was 15. Even though we are calculating the average price here, even though we are calculating the average price, this is my average price per kg at this moment. The similar way going forward, if you purchase n number of purchases also, whenever you are following the moving average price indicator, then the system will do the same, accumulate, system will make it average, okay. For the moving average indicator, for the moving average, the indicator, the price indicator is the, okay, I'll mention here is the pricing indicator is the V here, I'll put it here. Then price indicator, price indicator price indicator V, this is the yes, okay. This will be assigned into the material master. Remember, this will be assigned into your material master price indicator, okay. Now this is the average cost, okay. If we talk about the average cost, now I will take the same example here, okay. I will take the same example here for the standard price here, standard price, okay. Then what will happen here, the system does not, okay, accumulate the prices, okay. The system does not accumulate the prices. What system will do, system, it will straightforward, okay. System will not accumulate this price, whatever this price it is having 10 rupees, the same, okay. So for this first in first out, like that, okay, what system will do for this quantity, for 20, for 20th of February, So there was some power fluctuation. Okay, now I'm back. Okay, now here you can see here the sales. Okay, whenever you are performing sales, the pricing indicator yes will come into picture. The system will not accumulate. Okay, even if you sell multiple times also the same product, then the system will not accumulate. Okay, for this batch this is the price what we sold, for this batch this is the price what we have sold it. Okay, the system will not accumulate. Okay, so this is the difference between moving average and as well as the standard price, how system will behave. Okay, then material types. Then okay, as we discussed raw materials, finished goods. Okay, there are different kind of raw materials are there. Okay, how system will be identifying those raw materials. Okay, so I mean how system will be identifying the materials, what are the indicators are available in SAP system. Okay, we have the different kind of material identification indicators are there. At the same time material types are there. At the same time, what are the price control indicators? So for which material which pricing control indicator will be applicable. Okay, we'll see that one also. Then raw materials, raw material. Okay, I'll mention material price. Okay, material types. Okay, material types. Then identification, SAP. Okay, I'll mention SAP identification, SAP identification indicator, identification indicator, price controls, price controls. Okay, then so then let me write here. So material types, raw materials, raw material. How can I identify this raw material into SAP system? ROH. What is the pricing indicator here? As I explained here, V is the okay. V is a moving average. Moving average. Then the next one is that stores. Stores and spare parts. Spares. What will happen? ERSA. Okay, then this is also the moving average price. Okay, then here I will mention some description. Okay, then price to be price to be price to consider, sorry, for valuation. So okay, which price we need to consider? Okay, purchase price. Purchase, whatever the purchase price is there at the time of purchases, we need to use that price for the raw material for the valuation of the your material. Then packing and packing and materials. Okay, then VERP for this one also it's the same moving average, then same purchase, same only. Then finished goods, okay. So FERT is the finished goods. As I mentioned, for finished goods is the standard price. Okay, standard price. Okay, then this is the for finished goods. Okay, raw materials plus. Okay, see now if I want to manufacture a product, okay, to make the product, okay, to then what I need to have a raw material plus overheads. So okay, so I will explain you. Then how the standard price will arrive. Okay, now let us assume my organization is a okay, is a one mobile manufacturing company, let us assume. So to manufacture a mobile, what I would require is a plastic, I would require is a rubber, I would require is some iron, okay, I would require some other material. Okay, now to arrive the final cost of the goods, finished product of the mobile, okay, to manufacture a product I need to perform multiple processes. Okay, so in between that I would require multiple raw materials in order to manufacture a mobile. Okay, then what will happen, what would be the my total raw materials cost plus overheads. What is meant by overheads? The overheads are nothing but a, now to manufacture a mobile, in between I have it, I need to spend multiple different kind of expenses, like I need to use labor, I need to use machinery, I need to spend some power. Okay, then I need to use some oil, I need to, okay, I need to pay some warehouse charges. Okay, or I need to pay some scrap. Okay, I mean some scrap expenses. Okay, I mean to cleaning that expense machinery. So all these expenses we are going to call it as a overheads. Okay, so then including all these, then the system will calculate the final price. So for that one, what we would say, it's a overheads. Okay, so these are the raw material types. I think there are many raw material types are there. Okay, for our, just for our understanding or identification purpose, I just have mentioned here is the few raw materials here. Okay, even for semi finished goods also we are going to, for semi finished goods also we are going to treat, okay, as a standard price only. Okay, I'll mention here, for let me put it here is the semi finished goods. For semi finished goods also, okay, how we can identify the semi finished goods, JLB, then this is also the standard price. Okay, is also the standard price. Okay, so purchase price only, raw material. Okay, in case, okay, fine. So this is the standard price only where we are going to use. Okay, so for what we have discussed, we have seen about the types of the material. Okay, so different what we have seen here. Okay, so in case if you will, if anyone is having any further queries, so please let me know about this one. Please let me know then. Okay, fine, good. Okay, now we'll discuss about the process flow. Okay, remember this process flow is the important for you, for your interview point of view also. You must have to explain them in interview. Okay, the process flow. Okay, the process flow you must have to explain them. Remember. Okay, then, okay, so the process flow I would say material. Okay, flow, or they would say P2P cycle. P2P. Okay, P2P stands for, remember, procure to pay. Okay, procure to pay. Okay, remember this terminology you need to aware. Okay, don't confuse an interview. Maybe they may ask you, can you explain about process flow, or okay, P2P cycle, explain about the P2P cycle. Okay, don't confuse that one. Okay, now what is the process flow? Okay, this is the important for your interview. In case if you want, I'll mention here is the star. Okay, so it's a very important one. Without this process, okay, you should not start the and integration process. Okay, take this one. Okay, fine. So then what is the process? Okay, because even in the beginning also, as I told, being as a consultant, okay, we should know the process, where the process is starting, where the process is ending. Okay, if you know this process, then the configuration and execution, everything, it will be easy for you. Okay, the only one thing is that you should know the process, where is the starting point, where is the ending point. Okay, then in between, what is happening here, you should know this process. Okay, now the first one is a material requisition. Okay, so the material requisition by the production department. Okay, now let us assume, now if I want to manufacture a mobile. Okay, during the manufacturing, before starts the manufacturing process, then what kind of raw materials to be required to manufacture a product. Okay, then the requirement will come from the production department. Okay, these kind of raw materials to be required, and this many quantities also to be required. Okay, so the requirement will come from the production department by production department. Okay, by production department to, okay, warehouse department or stores department, warehouse department. Okay, so what will happen, the production department will give you intimation to the warehouse department, we would require so and so kind of raw materials to, in order to manufacture a product, remember. Then once this will be completed, okay, I'll put it like this, so that the process, because this is the process, right? Okay, then the second one is that purchase requisition. Purchase requisition. Purchase requisition. This process you need to explain, this is the process. Okay, so who will raise the purchase requisition? By stores. Okay, by stores, or warehouse, whatever it may be, by stores to, okay, or I will mention, okay, warehouse department will raise a, will intimate to purchase department. Okay, then what will happen, then the stores or whoever is working in the warehouse department, they will but everything will be in the system only. Okay, the warehouse department will intimate to the purchase department to buy the raw material. Then on behalf of the purchase, I mean, they will create purchase requisition. Then on behalf of the purchase requisition, then call for the inquiry. Okay, so then what purchase department will do, inquiry for the quotation. Okay, inquiry for the quotation. Inquiry for the quotations, not only single quotation, multiple quotations. Okay, by the purchase department. So now if you want to buy a product, some let us assume you want to buy some iPhone. Okay, what you can do, the regular practice, you need to first, before buy the product, you will inquire about the product where you will get the best prices. Okay, so then the similar way, even in real time also, what they will do, as part of the regular practice, they will inquire the product in the market. Okay, which vendor is supplying the best price, along with the best price, then price condition, terms and conditions, and qualities also they will check. Okay, then once the quotation will be finalized, then create purchase order. Then they will create purchase orders. Okay, so on behalf of that purchase order, who is going to create the purchase order? By the purchase department itself, they will create the purchase orders. On behalf of the purchase order, the goods delivery will happen. Goods delivery will happen here. Okay, then once the goods delivery will happen, okay, where the goods delivery, okay, Then in case, one more thing, one more point here in between, I will mention the note, but that is not the process. Okay, that is not the process. Then what will happen here? Okay, I will mention. Then once the purchase order will be created, what will happen? Then somebody need to review that purchase order, need to review, need to approve that purchase order. Note I'll mention the PO need to review and approve by the senior manager. In case if this is the process, it is there. Okay, in between, once that approve only, then only it goes to the, or once the release, once the purchase order will be created, that needs to be, purchase order need to be review and release. Approval is nothing but a release that purchase order, remember. Then that will be done, then goods delivery will be happen. Okay, then goods delivery will happen. Okay, then goods delivery, where the goods received, once the goods received or goods delivery, goods received against purchase order. Once the goods received will happen, what will happen? The next step would be, it it goes to the, quality verification. Okay, the goods, okay, quality checking, quality checking. Quality checking. Okay, once the goods delivery will happen, directly it will not goes to the invoice verification. Okay, it goes to the quality checking. Once the quality checking will be completed, then it goes to the final, thing is that once that will be done, then it goes to the invoice verification. The last step would be a invoice verification. This is the process what you need to explain in the interview. Remember, this is the important process what you need to explain here. Okay, this is the completely the process. Okay, now in order to achieve this process, we must have to do the multiple configuration steps. Okay, multiple ways there are. Okay, we must have to do all those things. But now the process we should know. Okay, is it clear? So if anyone is having any further queries, so please let me know. Okay, fine, no problem. Then, okay, so then in order to achieve this process, okay, then there are few other discussions we must have to, okay, we must have to do. Then, okay, so now this is the process. Okay, remember, one important thing here is that from here to until purchase order creation. Remember, until purchase order creation. Remember this, you need to know. Okay, there are no accounting documents. Okay, there are no accounting documents will generate. Okay, so until purchase order creation, there will not have any accounting entries. Remember, once the goods receipt will happen, okay, once the goods receipt will happen, then the accounting entry will start. And also quality checking also, remember, quality checking also will not have any accounting entry, because this is the practice what the organizations are following here also, because will not have any accounting entry. Okay, no accounting entry, no accounting entry. Okay, for QA checking. Remember, then for goods receipt, we will have the entry. Then once the goods receipt, then the invoice verification also will have the accounting entry. Okay, then I'll mention here accounting entry. accounting entry. Okay. Okay, I'll mention like this. This one also will have the accounting entry. Okay. Now, so what would be the accounting entries? Okay, we'll see that one going forward. What are the accounting entries? How it will get reflected? Okay, so now in case of price differences also, okay, how the system in between there are price differences. Okay, in case of if there are any unplanned costs for imports, okay, we will see that one where the account determination we need to map in OBYC. Okay, from there the system will determine the GL accounts. Okay, so here in general, the accounting entry for this one, okay, for goods received, what will happen? The accounting entry would be the accounting entry here is the okay inventory inventory raw material account is going to debit, then to GRIR clearing account, to GRIR. Okay, about GRIR clearing account, I have already explained you. Remember, okay, yesterday I have explained in detail. Okay, so inventory raw material account is a balance sheet account. Okay, inventory raw material. Okay, first of all, this is a BSX. BSX is a where we are going to map GL accounts in OBYC transaction code. This is the WRX. GRIR clearing account is a WRX. Okay, then this is the balance sheet account. Okay, this is the balance sheet. Okay, I'll mention like this: balance sheet and asset account, asset GL. This is also balance sheet account, but this is not the asset, this is the liability account. This is the liability GL account. Remember, even you should know the what is the GL account. Then this is the accounting entry: inventory raw material account data to GRIR clearing account. Then here it's a what will happen. Then here final one here when we are going to invoice verification, when the GRIR clearing account, okay, GRIR GRIR clearing account is going to debit to vendor, to vendor account is going to credit. Now you can see the logic here. How the logic will be. Now see, GRIR here is here is crediting, here is debiting. What will happen? Both will get nullified. Okay, WRX I just have mentioned here. Okay, now here what will happen? Here you can understand. Now let me put it this one here like this. Okay, now uh, let me go to borders. Alignment. So, okay, it is not working. Yeah, then let me select. Okay, strike through. Okay, now see now GRIR clearing account here credit. Now let me see the same way. Here you can see here what will happen. Here is a crediting, here is a debiting. Both will get nullify here. That is what yesterday I told you. Both GRIR clearing account, always the balance should be zero, but until to receive the quantity. Then final, what would be the final accounting entry? Inventory account will be debit, then to vendor account. Then once the invoice verification will be done, then the last step would be a okay payment to vendor payment. Vendor payment. This is the final accounting entry. Then whenever we are making payment to the vendor, okay, what will happen when we are making payment to the vendor? Vendor will be debit, our bank account will get credit. That is the final accounting entry, what we can see. Okay, then the accounting entry, yes, this should have the accounting entry. Then the vendor account will be debit, then to our bank account will get credited here. So until here the process will get end. Okay, until here the process will be end, the MM and FI integration process. But in between, the one concept which I have, I mean there are multiple things are going to happen. like freight we need to include, and also in case if there are any unplanned delivery costs for imports, in case if there is any price differences, okay, all the things we need to perform. But during the our when we are going to run the cycles, we will see all those. But now this is the regular practice, but only one question, I mean one thing I have not explained about the price difference. Okay, the price difference, okay, accounting entry also we need to write it, but there are different scenarios are there about the price difference. Okay, when we need to, when the system, what kind of there are different, okay, for the material evaluation, for the material valuation we have the different kind of price valuations are there. One is a moving average, okay, then to calculate the price differences, okay, we have the one is a batch method, another one is a moving average method. Okay, so tomorrow we'll see that one, what is mean by the move. Okay, I think we have a time, right? Okay, now let me put it here. So the price differences are two types, because the price difference accounting entry they will ask you in interview, but okay, that we will see. Okay, up to now, if anyone is having any further query here, please let me know about the process. Anyone?
Everyone left, sir.
Okay. Shankar, is it clear for you, right?
For me, clear, sir.
Okay, Shankar. Okay, Shankar. Yeah, because this is the important one. Okay, fine. Then the price differences. Okay, price differences are, okay, price differences are two types. Okay, how we are going to estimate the price, or how we are going to calculate the price differences. The one is the batch input method, another one is the moving average method. Okay, now batch input method we have only one method only. Then under moving average method, again there are three sub processes are there. Okay, so then if I talk about, then the one is a, okay, stock fully available. Okay, stock fully available. Stock fully available. I'll mention here. A